because that's what my prop firm Maven is using, right? It's closely aligned to this. The master in fact gave an instruction that you need to use the NQ. So I've got the data, I can use the NQ, but I thought let me align it to my sort of prop firm. So where we at now? So I've basically back tested. This is my own interest strategy and the results, right? As you can see, we are up a few points with a 50-50 win ratio. A 50-50 win ratio. And then we would have here the net W, the net win or the net loss, right? I won't bother with these two for now because I'm still focused. So it was 9 in my area, UTC plus 2. This is the London Open. So the London hits a 3 drives pattern lower, sets a massive top wick, sets a top wick, bottom wick, sets a massive bottom wick, another massive bottom wick, another. Now just from these 3 and this confirmation, I would have taken a long if I was probably in the market, simply because of just this pattern. It's a 3 drives, 3 weeks in the rejection. I would have taken. Here I was basically just aiming for 1:1. My initial thought was to aim for it because of it came into London heavy short already. So for me, this was always a stop hunt, and then followed by only thing that made me not take a 1:2 here was basically just this volume gap, this volume imbalance here. I thought, you know what, if it's gonna retrace, it might just quickly whip me into profits and then retrace. So that was my initial view. So now we're continuing right with our testing. I didn't even introduce myself. So basically this would be what you refer me to, dumb money trades. I'm an accountant by profession that just decided to start trading. So it's only this year where I'm starting to see steady progress ever since I've used these concepts, the DR, IDR trading concepts, right? So here my logic was that I'm trading basically IDR and structure, right? So it came in down, it hit a retracement, right? And then it came down, so we were here when I entered it, we were here. So now I must decide, is this structure going up to form a U, or is it going further down? Flip my dice, said it's going down because of these 2 candles engulfing 5 candles, right? So basically it went down, slight retracement, failed to set a higher high. I'm like, okay, that's another positive sign. So guess what we do as the money, we pull the trigger. So I pulled the trigger, and we were short, just like that, plus 1 hour. So now we continue. now we continue. So basically what it's doing a pullback, and then it hits another bearish candle. So if I hadn't taken a W, I would actually want to take this trade, because of there's a nice resistance. There's a nice resistance over here. So a low support tend to resistance type of play. So if it comes back in here, I'd probably take it. Take the short. So there it came, but now it came with a volume. It didn't show me what I wanted. I wanted to see another rejection on this area. But remember, now we are net short, right? So we're still looking for shorts. We're still short until it breaks this high. I'm still short. So I'm just looking for a place that has like multiple rejections, with structure continuing to the bearish side. Okay. What am I missing? So yeah, it's setting a bearish flag, right? Setting a bearish flag. So if it breaks below this, we in. There you go. This was our break. So we play. Risk 30 to get 30, and because of the time, it's almost close to the New York Open, which is gonna whipsaw the shit out of you. We in 30 points, 30 point risk to 60 points, right? Let's see how it goes. Straight to our stop loss. So we update. We've taken 5 losses. We've lost 30 more points, so it takes us to 80. It takes us to 82, right? So the trade is gone. We look, did we miss anything? Nope, they faked us out. Our levels didn't hold, so this thing is probably going up. It's probably going up. So we are done for now. We've taken a W, taken an L. We break even. Let's go. Let's wait. Let's go look for the New York Open now. So now New York just opened with a hammer. So now if you look at this structure, for instance, here, hammers and then rejection and then low again. Same thing is forming here. Hammers, low. So I'm gonna short this. I'm gonna go ahead and short this. Put it above our high with 40 risk, 40 reward. Right? Let's check. And it's below, but now it's wicking up. So yep, let's go. So this is what popped. So it came to wick us out here. Well, if this was a live trading condition, immediately when it reached this low, I would have set my stop on break even. But because this is replay, I don't get that chance, right? Now it wicked us out. Wicked us out, and with minus 40. So now, remember guys, it's not my strategy. It's not the master strategy. I'm just testing, just back testing market structure and how these levels react, right? So we just took a minus 40. So we on minus 122 and minus 122, and then we on 6, right? So we let it play out. So we see there's a rejection, right? The market structure, okay, let me anchor this. So the market structure, how it's going is that rejected. So this sweet spot right here, I'm looking for a short. I went too fast, but anyway, like I said, this was my sweet spot where I was looking for a short position. I would see this rejection, take a short, right? Okay, because of these highs, I would take a 25 risk and a 50 reward, right? Risk, in fact, because I've drawn down and the next rational level is here, I'd move my take profit to here, which is the TR level, which is supposed to be some sort of reactionary level, right? So like I said, it's a reactionary level. So it hit me, and then look what it did, went up, right? So basically we've just taken closed PL of 64, right? Just took a 64 TP, right? A 64 TP. It might look like I'm actually taking quick trades or a lot of trades, right? But if you just look, there's actually one that we won and we lost one, right? Lost the next one, then we won. So it's just 4 trades per day in my 2 sessions, right? Then I go on to the next day. I don't trade the Asian session, right? This is plus 64, which puts us to 211, right? 211 puts us to 211. Just taking nice W. Please don't remember, it was sweet spot hammer, had to bet on the hammer. Okay. So that's basically where we at. Now this has gone past journaled. We move. Now they go. This is a sweet level, but at this time of the day, what's the time? 18. Oh, this is a sweet level. Right here, right? It's a sweet level, man. It's a sweet level. I would buy it. I'm gonna buy it, but probably gonna trim my risk. If it closes below this level, I know that it was never aiming for a new high. If it closes below this level, then it whips us out and comes back, I'm gonna re-end. But if it whips us out with a heavy sell, then we're out. We're done for the day. We've taken our 20 L, and we move. Oh man, oh sweet, this level, man. You know, there are times when the market just plays its hand to you. You can see it rejects 1, 2, rejects for the 3rd time, right? And I'm up, so I'd take this 46, man, and go rest. See profit, take profit. Even if it spools up to hell, I don't care. I've got my 46. I'm good. So I'm taking my 46 right here where it closes. A deal I would have set a TP right here, but I'm taking it right here, right? So I'd say 6, and then That takes us 257, right? So it's to 257, all right? With a 50-50 win rate ratio, bruh, we're already up like a good sum, depending on the percentage that you risk. The reason I'm calculating the points is because I want you to go back and do your own back test, check your points, but how many points, or what's the price per point or price per tick that you are risking, and what multiplied by this, and what would you have actually made or lost in terms of cash, right? Don't forget to add in your commissions and swaps and whatever. You won't have swaps, but show commissions and your spreads, right? Just like that, man, we would have taken an easy 84. But I've already taken this to offset my 2 previous losses. I've already taken this. Would have loved to take it here, but it's not a problem. Hit our thing. So I'm dumb money. I'm not smart money. I'm dumb money. It's not investment advice. Own your own trades. So for today, for now, let me end here. Probably continue again in 30 minutes. It's time now that I give attention to my family and be with you guys in the next few minutes. But plus, this was just a test to see how much pips would accumulate in the matter of a few minutes back testing and me explaining the reasons for my trade. So until next time, when I come through, cheers for the ears, as Rolio would say. We're building proper traders here, man. People that are hopefully going to be titans of industry. Maybe we will move from dumb money to smart money one day. But until then, we hustle. I'm out.